Rohr here with an early global view on Thursday, April 23rd, 2015. It is currently 6:45 a.m. and the macro influence yesterday was very interesting across various asset classes, especially on a couple of key factors that led to some real weakness in the govies and sustained bid in the equities. We'll be back to that momentarily. So, what does all this mean to the markets? Well, on the back of that Bank of England hint and the better than expected U.S. existing home sales, the S&P was right back up into and somewhat above 2100 yesterday. But on the back of the weak data so far this morning, it is off 5 at 2095, and it's been down as low as 2088 once again. So this market is stalling into the low 2100 area once again. However, as we noted in our concise comment, non-video post yesterday, the market needs to sustain activity back below 2090 to 88. While it hinted at that in the first hour yesterday, never really closed below 2088. Once it was back above roughly 2093, it was ready to push up again. So we'll be looking at 2090 to 88 again on the downside, especially with the recent holding action in that area, much below which we would suspect the market can go right back to the 2078 to 75 support that it leaked out below after the very stale opening on Greek concerns Friday, and then ultimately sold off below but came back to stabilize. So really this was the gap higher on the week from last Friday. So at the very least it might go back there. Of course, the bigger lower supports are down into 2060 to 58 and 2040 to 36. On the upside, you have the old 2107 area highs of the contract and the all-time high up at 2117. Now, what's important about this as well, you'll note that both the hourly and the 30-minute MACD on yesterday's push-up got right up where they might have escaped their upper runaway band and signaled they could push on. Didn't happen once the market started to gag a bit later on in the day. So this is an important indication, especially with today's lower opening, that this market might not be as strong as the bulls would like, but we won't know if the bears have gained control again unless it's back below that 2090 to 88 level. And that pretty much does it for the short-term view of the S&P 500.